The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman here, Tiger Technicians Hour, noon till 1 Eastern Time at 877-927-6648. Pleasure to be. I hope you had a good weekend. Now, talk about good weekend. Over the weekend, looking at all these charts in preparation for the second of my webinar series coming up this Wednesday night. If you go to the front page of TFNN, you'll see it advertised. And we had the first one August the 2nd. Preparation, looking at different sectors, looking to see what should work, what should start to fail, where the correction areas are, and treating the daily call. This is my opening call every single day, and even on weekends I'm sending out charts, as important to be able to monitor what's going on. I found myself kind of leaning towards a more positive bias, and I mentioned that although in a purely technical way, in the Chapman wave, the daily charts had gone to sell modes. This is descriptive. It's not looking ahead. You can go to sell mode in the mean, like you can say, oh, the market's down 20%, that's a bear market. Very next day, you a buy signal, and it could be a short-term or a longer-term buy signal. It's just explaining that that's where you've gone. But the weekly charts, as I said, in all the charts we were looking at over the weekend, on the key indices, those weekly charts were looking good. I'm showing here the IYT. This is the iShares Transportation Average ETF, and it makes a high, all-time high. Let me just double check. Yeah, all-time high at 175.75. 175.75. That was, let's see in the weekly chart. Yeah, that was back in July. It pulls back very sharp to 164, so that's 11 points, about nearly 10%. And now it's at a very strong rally in leg B, but the technicals are starting to improve. The MACD's just about to cross positive. The stochastic is not great, but it's at 22% from being at single digits. Was that single digits? Single digits? Yeah, 9.23%. So weekly chart here needs to improve a lot. But look, if I jump over to the Dow just gave a tiny little pullback yesterday. Yes, it was an engulfing candle, but it's off the top, all-time high. The daily's gone from 22,179 to 21,843, 300 points, big deal. It's really nothing. Right now, it's back over 22,000. So I'm looking at this and I'm saying, wait a minute. My gut feeling was we deserved it. We deserved a pullback. We deserved a pullback of at least between 8 and 12%. And we saw the Qs, the NASDAQ Index 100, pulling back sharply. So the semiconductors failed to make a new high when the XLK, the tech sector S&P, and the QQQ series went to all-time highs. Was a heads up to say, hey, be careful, we could be pulling back sharply. And yet even there, the weekly charts were quite good. So I have to go through this one step at a time. Look, you've got a Dow 120-minute chart, pulls back sharply. But that's a 120-minute chart. Look at the nice rebound. Not a 50% retracement, but pretty darn good. So now let's go through the numbers. Exactly in the den. P says, Basil, that would be catastrophic. 10 to 12%. Goodness. You know, there's going to be a time where suddenly we have that kind of sell-off. But I'm looking, let me just go through this, because over the weekend, in preparation for my second webinar, I wanted to look at areas that are hardly ever discussed. I wanted to look at areas of perhaps real estate, perhaps the millennials. I've got a big section on the millennials. Where are they putting their money? And, you know, millennials have been very, as Kevin Hinks mentioned in the last segment in Think or Swim, yeah, the millennials have been integral to the economy and the way the economy has functioned over the last couple of years. So let me show you what I'm looking at. In terms of the weekly chart, the MACD is not great, but it is positive. That's the moving average convergence here in the middle. Let me move this away. Oh, before I move it, I'll just quickly show you. People always ask me, will I please show the E-mini? Yes, the E-mini, there it is. E-mini did that Chapman wave, stalk leg formation, the leg, the body, the neck, the head, and the beak. Now, if the beak is completed, I always say that after the beak in a Chapman wave stalk leg formation has been completed in the daily chart usually, you can get up, when it's completed, that is, you get a powerful rally. That is not when it pops up and then goes to lower lows. I'm talking about a huge move. So today's close is going to be something, because if this says we're done, we've sold off. Now we're back to a buy signal, maybe not a buy mode yet. I have to be ready to say, you know what? At 24.65 in the E-mini, up 25 points. You see, if we were only up right here at 24.52.53, I said, we are ready to fail. But that was a spectacular, even short squeeze. Doesn't matter, because if it holds here and has a slightly higher high tomorrow, all of a sudden that weekly chart is starting to look quite good again. So let's just go one step at a time. Up 25, outstanding action. Above the 9-period moving hour of 24.61. The weekly chart, technicals are good, and I put F/B because I said, you know what? We just barely closed under the 9-period moving average on Friday, Thursday, Friday last week, especially since the close was on Friday, that I got to watch this closely this week. And it's gone back to the trend line support. It went just above it. But the 120-minute chart did. The U-shaped pattern, going to a leg D, in Chapman wave, always look for Ds, went to a D, and it's above the 200-period moving average of 24.61 at 24.65.50 right now. So and it's leg D. But the MACD is very strong, stochastics at 95%. That is good. Now I want to move this 120-minute chart away and say, but wait a minute. I mean, how can we change from one week or one day sometimes to the next, because this is a period where we are doing a rotational correction. Let me show you. The QQQ series had a pretty sharp for it, 145.96 high on the 27th of July, 140.89, that's 5 points. 5 points on the downside in this particular Power Shares QQQ Trust series. This is the Index 100 trading vehicle. That's quite big, but look at the weekly chart. Says, come on, we haven't yet broken under the 9-period moving average of 142. What are you talking about? This is good action. Even the MACD is quite weak and the stochastics down below 80%. And now we're in leg B in the 120-minute chart. If I look at the IWM, I think I skipped the S&P. The IWM, whopping gap up move. Now, gap up moves in indices coming off a low of some importance. You've got to keep note of that, because we went under it, under the trend line in the weekly chart, and now we're bouncing back. So even the IWM is at 1.45% at 138.45. It really needs to get to 139.50s, and then I'm going to say, something else is happening here. Meantime, this is what I wanted to talk about today, that the speed and the effort and the power behind moves to the downside have been momentary. But the moves to the upside have usually had follow through. So make it clear, if the S&P at 2466 up 25 points right now is able to have follow through regardless of where we close today, and it's able to get to the 2473 level tomorrow, 2468 I think is the high so far today, if it gets to 2473s, that's going to be good action. I'll be back. Basil Chapman, Target Ignitions Hour, and the Dow's up 158.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So look at this. Here's the Dow off the 9-period exponential moving average. I've decided that on this coming Wednesday night, do something a little differently. I'm going to discuss things. I'm going to have some charts, but I'm actually going to do quite a lot technically. So if you're looking for technical, because this is stuff that I've done every single day, but I'm going to spend a little more time on it and say, these are the patterns I'm looking at. This is what I want you to follow. These are the levels we're looking at, etc. It's going to be just as since that Wednesday night, every single day has been very hands-on. And of course, we've had this chart right here as a demonstration chart of the Chapman wave methodology, looking for a leg D. That's the objective of the Chapman wave, to get you to a D. And what's really exciting about this is today we got that D. And this is in TWO. This is Two Harbors in Investment Corporation, a REIT management firm. But it broke out, and there's no other way I can really count this. I've got this as a B in the 120-minute chart. So that should try to get you into the gap in the 219, under 1019. So we're watching it. Look at the left side, right side, excuse me, price match. And look at the weekly starting to improve. And I'll discuss time frames, why we're looking at time frames. But in the meantime, the market gets really smacked to the downside. And look at all those green candles. This thing was going up while the market was going down. And that's really, I haven't spent much time on this Chapman wave Roman candle. I'll talk about it a little bit more in the webinar, how it works on the upside, how it works on the downside. So this is a hands-on. This is what we're looking at. And the other long we have right now is doing very nicely. And auto stock actually doing quite nicely. Who would have thought with all that bad news that's been coming out? Okay, so it's a very hands-on, practical workshop second webinar that I'm doing, like a workshop, I should say. So now let's go on here. So the IWM has had a very nice move, but it really at 138.83 on the 9-period moving average is 50 cents below that right now. It needs to not just climb above it, it needs to break into the 140.30 area by Wednesday or Thursday. If it does that, I have to just turn around and say, you know what? That might have been part of the consolidation, the rotational correction. You can keep rotating some of those sectors like the SMHs, but look at this candle. This is a whopper. This is a whopping good candle. And the weekly chart says, big deal. We've seen this before. We've seen this play before, Mrs. Lincoln. same old, same old. So we're going to be watching this real closely. And we're going to be looking at the IYT, which is, as I said before, the iShares. The weekly chart pulled back quite sharply. It's a G/B in the weekly. It's a D in the monthly, and yet the monthly held the 9-period moving average. The 120-minute chart is trying to climb to the 169 area. It's at 168.26. A failure late today really has to turn this market. So the Dow up 157 closes up 63 or 53, and the S&P actually pulls back to just about a +5 after being up 25. I just don't see what's going to do it right now. This is some real bad news. So let's continue, because I want you to go to gold. Gold is pulling back after a peak E in the Chapman wave. It did a left side, right side attempt. It did a perfect time relationship with it missed by a day, getting to the left side first high of 1290.40, the high of the 14th of June, and then it did on the it got close on the 9th, actually really went to the 10th. That was on Thursday, 10, 11, 14. Yeah, that was on Thursday. And then it went to 1293.8. And now what we've done is this 1298.1 peak E with a doji high. If by the end of the day, if this candle, if today's low is lower than 1286.7, that's going to suggest that gold could have a little bit of a pullback. But it's done almost everything we wanted on the left side to the right side. We didn't have it as a position, but we had it as a demonstration of techniques. I showed it a week ago. And now look at this. And silver I was asked about. So SI, silver, has done the same thing to a certain extent, except I didn't draw it in. I was so busy looking at other things. What happened is it went right to the 200-period moving average, exponential, and the 200-period simple moving average, right between there, and stopped dead. But it's holding very well. It's only down it's up 2 cents at 17.09. Gold was down $4. So now what I'm looking at is I'm saying silver and gold are holding very well. Let's have a look at the dollar, because this is going to be quite important. The dollar is trying to make an H pattern to push upside. The MACD is good. Stochastic is at 44%. It's flattening out. It's okay. It's really weak. That's what it is. It's weak. But the question will be, is this an lowercase h formation that constantly fails and is going to break the low that was made on the 2nd of August at 92.55, or is it going to close 2 out of 3 sessions above the high that was made on the 9th of August of 93.89? If it does that, gold will have an opportunity to take a breather, have a little bit of a rest, and regain some energy. And I've got something in my webinar that I'm discussing in gold that I think has relevance. I'm hoping that the next today, Tuesday, and Wednesday, the next 3 days before the webinar, gives me enough information to continue my thought on this process. We'll see. Let's look at the EUR/USD. This is Monday, so we want to get a nice overview. This is that right shoulder failure pattern, made a peak G in the euro-dollar currency pair. I'm calling this, at least for now, a peak F, but it has all the characteristics. In fact, I'm going to do this. I'm going to be strict to my technique, which says when there's a question, don't be afraid to put an alternative count, because it helps people. It doesn't hurt to say, oh, great, if you go up, you go up. If you go down, you go down. I think most people can actually say that. But what I'm saying is the technicals are excellent right now. Stochastic's pulling back, but it's still at 91%. The relative strength is still up in the higher range. The MACD is still very good. Just the histogram's just slightly turning down. This is all good action, and saying the euro-dollar currency pair is holding damn well, considering the move that it's had, going from the 1.040 area to the 1.18. I mean, this is really spectacular action. So now let's look at the USD JPY, because there's a nice relationship there. One was doing one thing to the upside, the other had the same pattern. And this is what I looked at over the weekend, and I thought, okay, wait a minute. You've got, I don't know if Larry's spoken about this, but this is the 20-minute, I believe, the same number of bars in an arch or a cup shape, repeats twice. And the second time around, you could get a really good bounce. It did break a trend line, but we'll see what happens here. Most importantly, what I'm looking at in the dollar Japanese yen currency pair, trading at 109.49, up 0.33, is that it's fulfilled a lot of the obligations that were set up in the left side, right side price time match. Now that 108.788, low of the 14th of June, 108.788, 108.716. It went fractionally lower with a doji candle last week. There's a daily chart on Friday, and today it's bounced above it. And the MACD is trying to turn up, and the stochastics at a better place now than it was when it made the previous low, that trough D. So we're going to see, is there some kind of a turnaround, an inflection or deflection point in the currencies and the commodities that we were looking at? We'll look at crude oil as soon as I get back. Basil Chapman, Tiger Technicians Hour. I'll be right back straight after these messages. Crude oil is down to 61.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Let me just show you the 10-minute E-mini right now. I made a peak D back at 11 o'clock this morning at 2,466.50. It's trading now at 2,463. Made a U-shape. See, the second time it tried to test the left side high for that peak D test, the MACD was turning down, stochastics now under 80%. So this says the next level of support that you need to watch on just the short term is 2463. A close on any 10-minute bar below 2461 in the next up until the end of the show will suggest that there's a timeout, and that means the afternoon is going to be really important, and a close above 2471 in the next 2 days would be unbelievably good action in the ESU, the E-mini September, and a close below 24.55 on the downside. We would say, uh-oh, just a pop-up. Let's see what happens the next day. Let's go to John in Philly. Hi, John. How are you?
Basil, I'm very good. Thanks for taking the call. Very nice that you just showed the E-mini S&P September futures on the 10-minute bar chart there, because my question relates to that.
Okay.
With the ESU7, the S&P futures, falling from 24.88 down to 24.30, Tuesday down into Friday morning, 58 points down. None of us are surprised by a bounce back. The news last week, of course, war is always unsettling, and with that, at least news talk being rolled back just a touch, none of this surprises. But as you pointed out on your opening, the strength of the bounce, 24.30 up to 24.66, quite strong. What I'm wondering is this. We all know when a trend turns lower, that bounces amidst the downtrend can oftentimes be breathtaking.
Correct.
Breathtaking in their pace and the amount that they recover and the speed at which they just dissipate and run its course. And what we don't know right now is this just a bounce that fails and then moves to lower lows, or was the bottom of consequence put in last week? So my question is there anything in your work that gives us a clue, a hint, as to whether this bounce 24.30 to 66 is just a short covering rally that runs its course or something different?
Well, of course, that isn't just a good question. That is the question, right? So this is the way I'm going to answer, John. Couple of things. In terms of the 120-minute chart that we're looking at the E-mini, you'll see that the green line right here is the MACD's fast-moving average. That's the 9-period differential. I call it a fast-moving average. And the slow-moving average, the red one's steadily moving up. The speed with which the 120-minute chart stochastic went from down in the 9% area to where it is now 10 times higher, 94%. And holding is very important. If there was a give back, if it was one of those bounces that saw the MACD go for about 3 to 4 bars, doesn't matter what time frame it is, just 4 bars, and by the 5th bar it's back under 80%, I would have said, oops, one-day wonder, be very, very careful. So just in terms of our little rudder, our little short-term rudder, the 120-minute chart, it's gone above the 200-period moving average. It hasn't broken Thursday's opening plunge, just almost at the price it opened, it then plunged. So it hasn't gone above that. So that's a kind of hint that up until this very moment that we're talking, it hasn't been successful in eradicating completely the sell-off that occurred. Now, this is what I wanted to talk about. I want to put a little bit of relationship to the whole thing. If you look at the VIX index, the volatility index as measured by the New York Stock Exchange, by the out of the money, the futures, and the different strike prices, and this is really a measure of, they call it fear and greed. I like to only think of it as fear, when it's skyrocketing, but most of the time it's just a series of numbers. And when it gets into the teens, that's where you got to watch out where the market becomes vulnerable. And look what happened on it wasn't the North Korean news per se last week. It was that the QQQ series, you see, there was a certain vulnerability in the market. The QQQ series had already made a top on the 27th. The Qs at 145.96. The SMHs had already made their high much earlier, back on the 27th of July. So on the 27th, and the XLK, I believe it is, had a belated. Yeah, that was only on the 8th of August at 58.22. So they were vulnerable to some kind of a decline. So this is the big question that we have right now. When I look at the different stocks, especially when I look at the semiconductor stocks individually, I look at many of the very important stocks that led the market up, like like an Apple, like a Google, they are really having high-level consolidations right now. At this particular, Apple's only down from the high, just under 162. It's at 159. So let me answer your question, make it really simple. When you go, and for me, it is really important to look at the historic context of the volatility index. And the volatility index very seldom has a big green candle that closes above the 200-period moving average. In fact, there could even be a study on this right as we're talking. Only once before did it have 3 closes above the 200-period moving average. This was back in 2016, going to the English Brexit vote to leave. That was on the 1st of July at 26.72, and that culminated the 3 green candles that closed decisively, well, 2 of them decisively above the 200-period moving average. Then look what happened at the very next junction, where we got the high above the 200-period moving average of 1754, the week of the 9th of September 2016, and 2171. The next week it was 2171, and it closes under it, and it stayed under it for about a month and a half. Then it comes again with the U.S. election the week of the 1st of November, week of the 4th of November, and it goes to 2301, and it was only 1 week close above the 200-period moving average. Kaplop, it goes right below both the 200 and the 9-period moving average. Then it tries to rally for the French elections the week of the 14th of April. Once it closes above the 200-period moving average of 16.22. And then what does it do? The very next week with the election, I think it was Sunday night, it pops up a little bit higher to 16.28 and then kaplop. And then the Trump-Comey, it held intra-week above the 200-period moving the week of the 19th of May. It did the same. It touched it with the Trump health care bill back in the week of the 30th of June. And then on Friday, it actually closed with this whole North Korea thing above, and here we are. So the history of this is saying we have these one-off situations, and once it's a done deal, the market tends to move on. My contention is North Korea is not a done deal, but it might be just done for now, but it's hanging there. So there's a little bit of a difference. So I'm going to, if you want to hold on, I'll actually give you what my conclusion is in a few moments. Can you hold on?
Thank you, Basil.
Okay, we have got John in Philadelphia, and John has asked a question about the S&P. Really, what's the likelihood of going to new highs? What's the likelihood of breaking down? That's really the question. I think it's a question for all of us. I'll be back and I'll try to answer it. Basil Chapman, Dow 140.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So if you're looking at Tiger TV, and believe me, Tiger TV, it's a lot of fun when I'm on the road or whatever, and I say, I want to hear what's going on. I listen. I just tune in and I say, hey, let's see what they're saying, because some important information and the charts. Look at this: daily chart, weekly chart, monthly chart in the background, 120-minute chart. So here's the question. The question is there enough residual strength to be able to at least get close to and test the area of 2490.87, the all-time high, saying the S&P high made on the 8th of August? Or I'll be looking at the pattern that I just drew now in the Chapman Wave methodology in my CD, introducing the Chapman Wave methodology CD book. I spent quite a lot of time on this H pattern, lowercase h pattern. Can go to a lowercase m because the H holds beautifully and makes another H. But it can also turn around and make a V-shaped pattern. And that's really what we're looking at. So there are 2 fighting patterns here. There's going to be the potential for a V-shaped turnaround, but the stochastic hasn't even turned positive yet. It's at 19%, and the MACD is really looking very poor. So I drew in the H pattern. And that to me says that in the next 2 sessions, there's a chance that we're going to find a tremendous amount of pressure between S&P, if there's another rally tomorrow, between 2470 and just about the high of that candle, 2474. I'm actually going to give it the benefit of the doubt. I could say it could even go to 2475, 76 area. Not the point. The point is that it takes a lot of time. Look at this. Look how long it takes for the MACD to actually turn around when it's had such a wide beta, the difference between the slow-moving average and the fast-moving average. It takes a V-shaped turnaround or time. And then you need the stochastic to give you that upside momentum. So the stochastic is the torque, and so far it really isn't actually confirming the torque just yet. It hasn't broken positive. The on-balance volume has, and the MACD is way behind. So here's what I'm saying. If at any point this week the S&P closes above, has to close, about 2478.50, just anywhere close to 2480. And why do I say that? 2484.04 was the peak D high on the 27th of July. 2490.87 was the all-time high on August the 8th. If it can get just above this candle and then start to work its way into the wick, the long, skinny wick, and on any day this week, it's holding very well at 2482. I would even say 2480. No, 2484. It actually has to go all the way to 2484, but is holding there. I'm going to make it for 120 hours, almost for a whole day. If it does that, there will be enough momentum built up in the technicals of the daily MACD and stochastic and on-bounds volume to say, you know what? You can have a test of the 2490.87. Make it very clear. Over the next one day, normally what I'd expect is some kind of a doji-type candle with a new high, a new recovery high made. And then by Wednesday, we're already back down way under the 200 period, the 9-period moving average of 2462. We're in the 2458 area. If that happens, I would suggest we're done for this bounce. Short squeeze, done. Not brand new buying, more short squeeze and repositioning. If we hold, not only will there be a greater short squeeze, the disbelief will be incredible, because if it starts to hold in the middle of this wick, I'm going to say it again, 2483 to 4, just hanging out around that area, I think there's going to be a squeeze to a new high. As it stands right now, for what I'm looking at, we still do have a small short position in the Dow. I'm still anticipating there's going to be more testing to the downside. But the weekly chart is, this is good action. I'm almost having to say, you know what, above the 9-period moving average of 2451, it's above 20, it's at 2465. I mean, that's 14 points above the 9-period moving average. I am impressed. So, John, I'm making it clear. 2483.84, holding for one day. I don't see how they won't be able to squeeze it to a new high. A failure in the next 2 days, going back down under 24, say 57, says, no, you can have a couple of bounces, but we're not going much higher, and we're going to start to make lower lows and lower highs. I'm trying to make it as simple as possible, but my contention is that the VIX, unless Mr. North Korea is going to do something really weird, that VIX, I don't know what's going to get it back to the 17.28 area. So my contention right now, keep your eye on the VIX. The VIX goes down to 1150. That's kind of benign. That's allowing buying pressure to be maintained in the market. At any point, if there's another bad news event and you see the VIX break above today's high of $14.05, even $14.06, we're back into very big nervousness. Semiconductor index, SMH goes above 87.50. It's at 86.62, a point higher, 87.62. I have to say that's really good action. Sideways consolidation more than anything else. I hope that's, this is from my point of view. Oh, and the TLT. The TLT right now is down 17 cents. It looks like it's trying to make a peak D, but holding this high area above 125.58 says that money is still flowing into bonds, probably from stocks, certain sectors in the stock market. I think the sector rotation is going to continue. So that's what I'm looking at. I had a question about high-grade copper. Look at the high-grade copper has been fabulous. Yeah, it's at peak D, holding very steady. I think it's going to make slightly lower lows and lower highs, but it is holding well. If at 2.90, if it starts to break under 2.84 at any point in the next week and a half, then I'll say, okay, copper's going to take its turn now and have a bit of a breather. Next question was crude oil. Yeah, crude oil, look at this. Crude oil pulling back at 75, that peak C1, C2. I think it is a double top. Now the 200-period moving average, at least for the short term, is a repellent. I don't know if I'm seeing it going to break down. I just think 47 should be good support, and maybe it just chops around here, that's all. But it hasn't shown real strength to be able to break out above the 200-period moving average of 50.22 and hold. Sarah wants to know about the stalk leg. Stalk leg bearish, breakout failure, went to take position before the beak. Oh, yeah, that's tough. That timing is, look at this. I mean, the ESU, I had it, but I didn't put it in my newsletter. I said this could be I spoke about it. I said this could be a failure. We go up and then we break down, but you got to be right on the spot to be able to pick it up. Because when it occurs and you turn down really sharply. I'll try to find some more and we'll make it as an exercise. So now let's do one other question. Oh, Goldman Sachs. Is Goldman yet ready? No, it's having a bounce. It's up to 4.29. Hey, that's good action, up 1.92%. I'm going to keep an eye on this. This is a good pop-up, but I'm only calling it pop-up because if Goldman at 227 is able to close above 233 by Wednesday afternoon, Any 120-minute bar that closes above 233 going into Wednesday afternoon, I have to consider it's going to go to leg D. But the XLF, this has just been chopped in a sideways motion. I think the next 2 days are going to give us tremendous information about the financials. And we'll look at VRX for Kevin as soon as we get back. VRX trading at down 10 cents to 13.79. Basil Chapman, Tiger Ignition's out. Dow's at 145. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, folks, we're back. Okay, so this is going to be very interesting because it's over here. Yeah, because Sarah wants to know KSU, Kansas City Southern rails. Very good move, up to at 105.01. Remember we were talking about the IYT, the iShares Transportation Index, just a moment ago? Well, look at this. This is ABC. This is a brand new leg C to the upside. A, right there. A, blue B, blue C. Why? Because the technical is just about to turn up. Stochastic is looking good. I like this. And there is the Chapman wave. And since you asked the question about the stalk leg, I can give you another one. Look, there's a stalk leg right there. And it has to be an oval. It cannot be, the body has to be an oval. It cannot be a rectangle. And this is decisively an oval. And we're looking at it and it says, okay, Kansas City Southern, KSU trading at 105.02, up 2.05. You could pop to the 106.36 area for leg F, And then we've got to be a little careful, because if it starts to fail, it's going to come back to retest the left side lip of 106.35. And if it takes out the low that was made for any reason of 100.17, the low of the week of the 21st of July, that's very negative. And that would be the after that would be the neck, and then the beak, the head and the beak all coming to one. The beak comes down, and that would suggest that it's going to go deeper, but then it can have a very strong bounce, just as we've seen today, when the beak completes. Beak completes. There. So Kansas City looking good. 103 at 105.03, 103.50 to 102.90 should be very strong support. But if it retests to the 105.30s again one more time, you can raise that and say between 104.10 and 103.40 would be good support. Okay, and it's just about a test right here on this dot right here, 105.36. It'll be testing the SAR, and that is the parabolic SAR. Oh, is that the show's dot? So let's make it clear. If the dot closes under, it's 145. If it closes under 83 by the end of the day, and the VIX rallies somewhat, says, hey, this is just a transitory thing. If it holds very well, or it makes a new high, that says we should go into maybe Wednesday before we turn down. If we're going to turn down, I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today. If you're an active trader looking for that extra edge when it